time you're watching This Is Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and various market strategies that you must follow on a day like today, which is also going to be the BSE contracts expiry as well. Now, remember, we have already seen in the past 1 week or 2 weeks or so that the Nifty had rallied about 1,000 points. But this week so far, it's been the fourth consecutive session when we have seen a losing streak on the Nifty. In fact, in these 4 days, the Nifty has also given up a fourth of that 1,000 point run up as well. Now, unlike the previous sessions where we were actually witnessing some of the dips getting bought into, the intraday recovery that was witnessed on yesterday, led by, say, the FMCG stocks, was actually sold into trade as well. Now, what's happening on the global front? US stock markets also ended lower for the second consecutive session. We've seen investors taking off profits with major indices hovering near record high levels. The decline followed also the comments from Federal Reserve Chair Jerome Powell, who pointed to possibly overvalued stock prices and coming ahead of upcoming inflation report later this week as well. So overnight, Nasdaq fell by 0.3%, S&P 500 was down 0.28%, and Dow Jones also fell by about 0.37% in trade. Asia markets also started off on a mixed note today as investors reacted to the continued sell-off in major tech stocks on the Wall Street, including Nvidia and Oracle for the second consecutive day in a row. So the Japanese index, Nikkei 225 index, was down by about 0.1%. Kospi was down by 0.2%. Odd in trade. We're also given to understand that the implied open, that the GIFT Nifty trends are indicating to a softer start again, about 0.19% lower, and that's about a 47 points cut. And this also comes in on the back of the continued sell-off by the foreign institutional investors. Even in yesterday's trading session, they sold off about 2,426 odd crore rupees, even though the DIIs bought about 1,212 odd crore rupees in yesterday's trading session. Well, time now to understand what next for the markets going forward. And we have a very special guest joining in. Mr. Gaurang Shah, Senior Vice President of Geojit Investments, is now joining in. Warm welcome to you, sir. Thank you so much for taking the time out. I want to begin by first understanding from you, what do you think is leading to a sharp resistance being seen in the markets? We have everything going right by way of the reforms in the domestic markets, the data points that we are getting. Brokerage houses are penciling in higher targets for the growth for FY26, even for the markets over the next 12 months or so. Yet we have the GST rollout, and that's already tickering into segments like autos. They're seeing record deliveries and record bookings on day 1, 2, 3. And we're also getting to see from e-marketplaces that they are enthusiastic about the festive demand as well. So everything seems to be going right, yet at the same time, the markets are facing a lot of resistance. What do you pen that to, sir?
Thank you, Sakshi, for having me on the show. Good morning to all the viewers of BTTV and to you and your entire team. A small disclaimer before we go in stock specific also. Sure. All recommendations on this show this morning are a part of our research team recommendations. Our company, Geojit, or I do not have any personal investments. No financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their investment interest. So to talk about the markets, I think, Sakshi, what we are looking is just the last 2 or 3 days. Yeah. My sense is that if we have to look beyond that, then we had a very strong upward movement for almost about 10 to 12 days. And from, I think the lows of 24,500, 24,700, we saw a significant uptick and close to about 25,450, correct me if I'm wrong. This rally was a hope rally that a lot of reforms are going to come through, and my understanding, like we discussed last time, the GST 2.0 is not the only one. As we go into the future, there are going to be many more reforms that will come in from the government side, and all those policies which are unviable will be done away with. New policies will come in, new regulations will be set, so the ball will start rolling. Now, what has happened is that, from 15th of August, we saw all these discretionary, non-discretionary consumption names moved up significantly. The numbers that were announced on 22nd September, that was the first day of the Navratra, first day of the GST implementation, was a pent-up demand of almost about 40 odd days from 15th of August till about 22nd of September. So the numbers look quite good. We are having a feeling that these numbers will also look strong as we go into the future, because the demand is going to look quite strong. equally strong is going to be the export market. The problem is that we had run up, we need to consolidate, and hence we saw this correction for the last 3 days. Today is the monthly expiry. Sakshi, correct me if I'm wrong, for the
Yep.
September month. You might see a little bit of elevated choppiness and volatility. But I think rollovers and numbers will give us a little bit of insight by the time we say goodbye to the September series and welcome the October series for the FNO segment. So this correction is healthy. Nothing has changed, but only thing is that uh, it was followed up. This correction was before we saw a significant rally, almost about 800, 900 points uh, on the Nifty. So this consolidation, uh, good to see this consolidation, Sakshi, to be very honest. I think it'll get opportunities to new players to come in. The short-term
Yep.
profit booking was witnessed. Nothing to worry.
Nothing to worry at this stage in time. So, Gaurang, help us understand, your, focus sectors at this point in time. Are you betting big still on the consumer-oriented space at this point in time? Because we've already seen a run-up, like you pointed out, in autos, in FMCG, in consumer durables, maybe even in retail stocks, footwear stocks as well. So, from the time 15th August, when Prime Minister Narendra Modi announced that there will be a reform of GST 2.0, over the last 1 month, we have seen a run up already. Many of the stocks have run up 10 to even 30%, specifically in auto segment as well. So, would you still continue to bet big on this theme, or do you think time is now to look at shifting to other sectors now?
No, no, Sakshi, look, whatever has happened in terms of reforms, GST, the impact of that will be visible in the next maybe about 2, 3 months. In terms of consumption picking up and that
Yeah.
translating into a better improvement in terms of top line and bottom line for the consumption related themes. So consumption will remain in focus. We are only talking about GST. Before that, we had good monsoon. That means semi-urban rural India will start consuming more. That will add to the bottom line and top line. Along with that, before that, Honorable Finance Minister Srimati Nirmala Sitharamanji announced 12.75 lakhs, no tax. So this all put together will give push to the consumption, but it will take a time. So consumption will be in spotlight. Whether it is discretionary, non-discretionary, it's your choice. But along with that, my sense is that cap goods engineering, cement, uh,
Yeah.
BFSI segment, that is banking, strong private sector banks, public sector banks, strong NBFCs, and along with that, I was just reading a report. We, I think there are going to be a huge order, historical order for 97 Tejas,
Yeah.
which will be put in place. So I
Mm.
think the defense sector will also be in spotlight.
Absolutely, can't not talk about defense sector with you, which has already started into momentum, and we've also seen yesterday how cabinet has cleared a huge amount for the maritime industry as well as the shipping industry as well, and that led to some move there as well. But we'll come to it in a bit. I just wanted to highlight, since we were talking about the consumer-oriented space, HSBC has also come out with a report. Viewers, they see the consumer sector recovering from here, driven by favorable base, income tax cuts, and GST cuts as well. They have factored in the GST cuts and have revised the estimates. So for Britannia and for Nestle within the FMCG pack, they see the highest increase of 5% in FY27 EPS. They've upgraded Britannia to hold, raised the target price to 6,140, upgraded Nestle to hold, raised the target price to 1270 now. Their preferred names apart from these is also Marico, where they have a buy rating and an 870 target, and also Godrej Consumer, where they have a buy rating and a target price of 1470 as well. So from the consumer space, there are brokerage houses also penciling in higher targets. Now, you also did point out BFSI as a preferred sector. This is also being seen as a sector that will also see the secondary demand because of the primary demand in consumer durables and in autos. So a lot of financing will happen there. Plus, I want to add, as of yesterday, there's a lot of buzz. Even sources have told Business Today Television that the focus is coming back on the public sector banks because there is some thought that the government may be looking at increasing the foreign holding in the PSU banks from the current 20%. It could go up as high as 40%, or it could just go, up not by a notch above 26%. We don't know what that number will be. But penciling that higher foreign holding, Nuvama has already come out with a report saying that they believe in case there is an increase, there could be a potential $1 billion of a passive inflow that could be coming in the PSU bank. So banking space as a whole is what I wanted to discuss with you. How are you looking at these moving parts?
Well, so like I mentioned, Sakshi, policy changes will be, it's a continuous process. You can't put a stop over there from the
Yeah.
government side. And the government is uh, very strongly of a belief that they want to make India the next $1 trillion economy. They want to make India the large manufacturing hub. And all this is not going to happen by just words. It has to be followed up by action, policy changes, and implementation at ground level. So this is what is reflected. So for us at Geojit, we are positive on private sector banks, public sector banks, and strong NBFCs, like I mentioned. Now, for us, what matters actually is okay, fine, these kind of regulation changes will throw in positivity. But what matters to us are numbers. And numbers are strong, you will have reaction on the stock price, and that will followed up by the sectorial rotation or sectoral re-rating, etc. So we're positive on Axis Bank, we're positive on HDFC Bank, ICICI Bank, Kotak Bank, IndusInd Bank, amongst the private sector banks. In the public sector bank universe, I think yesterday we saw a new all-time high, if I'm not mistaken, for State Bank of India. We're positive on
Yeah.
SBI, Bank of Baroda, Indian Bank. Indian Bank also was a new lifetime high, Sakshi, yesterday, if I'm not mistaken.
Yes.
PNB, Canara Bank, these are the names that we, and our sense is that the gross and net NP is going to come down quite significantly, and that will make the balance sheet stronger via provisionings coming back to the balance sheet.
Okay. You also have a City report today which has a buy rating again on SBI with a price target of 1050 again. It's topped the preferred list of PSU banks for City as well. Motilal Oswal has also come out with a report with two of the PSU banks that they are betting big on SBI and PNB, and they believe they stand to benefit the most with all these favorable news flows that are coming in as well. Motilal Oswal has a buy rating on SBI with a target of 1000 and 130 rupees target for PNB as well going forward from here. So upside of about 15% odd from the current levels is what we are given to understand, along with what Gaurang has mentioned in terms of his own choice of stocks there. Just also briefly mentioning that, of course, you're seeing on your screens also, viewers, that we are looking at a slight, back foot kind of an opening again and maybe below 25,000. So keep an eye out on that. We'll definitely come back to it when the pre-open settles at 907, 908. That'll be a better time to really look at how this volatility settles in the market. Gaurang, apart from the consumer oriented spaces and banking space, the other space that you have been vouching for is defense space at large. Constantly you've guided our viewers on Business Today that these are the themes that one has to believe for next 4 to 5 years, and in case you're not too much in a hurry, maybe even keep it for the next generation, because this is the one theme that's going to be a big theme for the next many decades to come as well. The country's focus with increased VUCA world and uncertainties is that more and more countries are now focusing their attention and increasing their focus on expanding, investing more in the defense space, and that's going to even benefit a large chunk of our own defense majors. Now, you've also talked about the Panch Pandavas from last 1 year that you've been focusing on our channel as well. With the latest information that we have from the cabinet on the shipping space, how are you looking at the new dynamics change?
So I think, there are a couple of changes. Bharat Mala Pariyojana, which is to do
Yeah.
with the road transportation network. Then you have the Sagar Mala Pariyojana, which is to do
Hmm.
with the logistic in terms of improving the infrastructure for existing ports and opening up of new ports. Our reliability is at a highest level, Sakshi, when it comes to imports of ship or taking ships on charter or on freight, and we pay a big sum for that. Prime Minister has laid down an elaborated plan on this. Uh, Amongst the shipbuilding companies, purely shipbuilding companies, Sakshi, Cochin Shipyard and Mazgaon Docks, these are the
Yeah.
two names we are positive on. But this is not a recommendation, just a reference amongst which are the other stronger companies. So you have names like Garden Reach, which does phenomenal work in the
Yeah.
shipping industry. And then, of course, you have the companies which are associated with shipping, direct shipping. Of course, there we don't have a coverage, but my sense is that this is also a huge opportunity.
Okay, fair point. So that's the entire defense as far as shipping sector particularly is concerned, and the top choices there. Let's also focus on some of the other moving themes as we have been noticing, and this one is again from the EMS space. Gaurang has also spoken about this before as well, and now we have fresh reports that are actually coming in on some of the players that have been leading the gains over the last couple of years. Dixon Tech is back in focus. UBS has upgraded the stock to buy, raised the target price to 23,000. This is the highest brokerage house target price that we have for Dixon Tech now. The company believes that Dixon Tech is poised to grow for the next phase now via backward integration into non-semiconductor smartphone components as well, such as displays, camera modules, enclosures, batteries as well. And they're hoping that this will lead into EBITDA margin improvement going forward from here, and how they're looking at increased revenue. And the company will have some strong growth levers even beyond FY28 is what they are betting big on. So will be absolute long term. Gaurang, you've talked about PG Electroplast with us before, and you do see that this space is again one of the promising spaces. But a lot of retail investors will find these high priced stocks very difficult to look at as a buying decision. How would you advise them to look at it now?
Well, don't try to put all your money at one time in any sector or any theme that you believe in, Sakshi. Time is always by your side. So you need to be disciplined. Now, the entire EMS stroke chip semiconductor sector looks quite vibrant given the kind of
Yeah.
policy changes and the focus that the government is putting in. One more company other than PG Electroplast that we have coverage on is CG Power.
Yes.
This company also, I believe, started their initial manufacturing facility in Gujarat, Sanand, if I'm not mistaken.
Mm.
Uh, Dixon, you mentioned, of course, we don't have coverage, but it's one of the leading companies. And the kind of opportunity and the numbers that we are talking about in terms of scalability for this particular sector is huge. And I think as we go into the future, Sakshi, from being 100% dependent on imports for chips, semiconductor, PCBs, etc., I think there will come a time when India will start exporting to the rest of the world.
Okay, fair point. We'll keep an eye out on that. Viewers, it's 8, so let's focus on the markets to see how that has settled in trade as well. On the Nifty Bank, we'll also focus on some of the sectors that have been dragging lower, like IT, for instance. 25,034, so we are still holding on to that 25,000 mark. That's a comfort. 22 points lower in trade. The Nifty Bank 0.1% lower, so starting at the back foot, but again, holding up to that 55,000 mark. IT could again be on the back foot, 0.2% lower in trade. Let's also pull up PSU banks. Let's also pull up FMCG, for instance, and see how those sectors could be moving. PSU banks flat with a positive bias there. And when we look at the FMCG sector, now that's also slightly higher. Let's also pull up autos. Remember, yesterday, a big chunk went into profit booking for the auto space as well. Again, 0.2% lower after having that stellar run up right there. So we'll come back to it once the markets open yet again. Gaurang, apart from the sectors that we have already discussed, where else do you feel maybe if not Q2, Q3 onwards, the outperformance in earnings can actually come in, and therefore we will see, October to December or maybe the last quarter, looking at a sharp improvement from where we are currently.
I think insurance should do well, both life, non-life, general insurance, Sakshi. Real estate sector should do well, given the kind of projects and the numbers that are being spoken about, and the sold out placard has been put in front of the gates with the projects newly launched. And they are not small ticket size projects, actually. They are huge. Even from where you are in Delhi NCR, definitely there have been a record number of, even in city like Mumbai, where I am from, there have been huge opportunities. For life insurance, yeah, there was a little bit of concern from the companies for the GST changes. But my sense is that this is just a small change. Long term, I think there is a huge opportunity for insuring the uninsured. I think that's the theme that most of the insurance companies are going to take it forward.
Fair point. Let's look at some stocks to watch list. Viewers, keep that in mind today. Lupin from the pharma space is in focus. It's got a US FDA nod for antiviral ANDA with $16 billion of US sales going forward. It's indicative of opening on the positive side. Quality power is in focus. You remember it closed also higher in trade yesterday. Now remember with the co-development agreement with Hyosing TND for gas insulated switchgear instrument transformers is something that's going to be keeping the stock in focus. 999 was the last level that we saw it at. Let's see how it opens today. Birla Corp is going to be in focus. It's been declared preferred bidder for limestone mine in Telangana, so keep that in mind as well. It's indicative of our opening just about 0.7% higher in trade. So look at that stock. TBO Tech is going to be in focus. It's signed up for travel marketplace by Amadeus South Asia. That's also in focus as well. Let's also pull up CRISIL. It's going to be acquiring McKinsey Price Metrics in Canada for $38 million. So keep that stock in mind too. We'll also look at Gujarat Pipavav. It has bagged a contract for hiring port and storage services from ONGC. That's also in focus. AWL Agri has signed MOU with C and Solitaire to lead about national mustard going forward from here. Keep that in mind. Tata Motors from the auto space is going to be definitely in focus and may react on the downside, viewers. This is after the cyber attack impact of FY25 has been seen as greater than the FY25 profit for JLR. So keep that in mind. We're going to be coming to that next. Although no insurance can actually lead to a £2 billion kind of an impact that is also that we are going to be seeing at this point as to how it really pans out. Dalmia Bharat, it has confirmed the attachment of its land worth 377 crores by ED under PMLA. Again, a stock that could be watched on the lower end. KRBL from the rice exporters space, it has said that the export of non-basmati rice will be permitted only upon registration with the APEDA. So some of those news flows that are coming in. Tata Motors, Gaurang, we'll start off with that from the auto pack. This was a stock that a lot of retail investors, maybe invested in on the run up in 2024. This entire year has been a complete disappointment. It stayed in a very narrow band of a range. And now, with these fresh concerns emerging, do you think some of the benefits of GST cuts will be shrouded because of these impacts?
It could be a case, Sakshi. I don't deny it, but I think there is a little information that is available. So it's difficult to dissect it in terms of
Yeah.
how serious, how long, how prolonged, and what will be the cost that Tata Motors will have to pay or JLR will have to pay for this particular cyber attack. And this is one of the reasons, Sakshi, that we are positive on IT sector, because you are going to have challenging times with respect to cyber attacks, AI related, misinformation, false news, or fake news, whatever you want to call it. Uh, but speaking about Tata Motors, yeah, I mean, it is one of the underperformers in the entire auto pack post the entire GST change that we see. But we remain positive from a long-term point of view on Tata Motors.
Okay, long-term positive on Tata Motors and beyond Tata Motors in the auto and auto ancillary pack. Where are you keeping your attention right now? I mean, Maruti Suzuki at record high levels over 16,200 levels. How are you looking at it?
So I think new investments could be made at lower levels. Let
Mm-hmm.
this euphoria or froth of GST cut settle down. Let this last 2 days numbers, which has created a huge excitement in names like M&M, Maruti, Hyundai, two-wheeler manufacturing companies. Let it settle down. You have investments already. You can continue to hold on to it. Fresh investments, you can make some part investments, and then the dips you can buy. Auto ancillary, we are positive on Motherson Samvardhana. We are positive on Uno Minda. We are positive on CIE Automotive. Tire manufacturing companies, JK Tire, Balkrishna Industries, battery manufacturing companies, Amara Raja and Excite Industries. So I think if auto sector does well, auto ancillary stroke tire battery manufacturing companies will also do well.
Okay, fair point. Shifting our focus to the market opening, then viewers, let's look at the Nifty and how it's opening in trade today. And of course, we'll follow it up with all those sectoral moves as well. So, slightly starting on the back foot again, as was being seen in the implied open, 0.18% lower at 25,012. The Nifty Bank also 2/10% lower, just hovering around that 55,000 mark. Let's also pull up the other key sectors like IT, for instance, 2/10% lower here at 34,903. Let's also pull up autos, about half odd percent lower, so on the back foot again. Let's pull up PSU banks to see if there is any move that continues on the positive side there. I can still see the advance decline ratio just about slightly favoring the advances, 948 advances on the NSE, whereas 753 on the declining side at this point. PSU banks also slightly lower. Broader markets, if there is any gain, just a minor gain on the mid caps and the small caps at this point, but a large part of the market is still drifting towards the lower sentiment at this point. Let's also pull up some of the key sectors. So we've seen autos, capital markets is lower, real estate is lower. Remember, real estate was the top loser in trade, so another 0.25% lower for that one. Oil and gas and financials have also started on the back foot as of now. But which are the gainers? You have defense as a gainer, then you have capital goods as a gainer, you have metals as a gainer, you have pharma, FMCG, and energy index as some gains can be seen, although these gains are also minor, not major. But at the same time, we are seeing some block deals also that have taken in place in the block deal window. 1.1% equity has exchanged hands for Polycab. The promoter has sold some stake there. So we'll get more details on that front too. Top losers on the Nifty from the auto pack. In fact, you have Maruti, Hero Moto declining in trade. Titan is also falling in trade as well as this point. But gainers are Hindalco, Bharti Airtel, Adani Enterprises, Dr. Reddy's, Nestle, and Trent as among the Nifty gainers right now. Let's also welcome our other guest on the panel. We have Mitesh Panchal now joining in to track the technicals for us. Mitesh ji, good morning. Good to have you with us. How are you looking at the market open on the monthly expiry session for the NSE, for the Sensex contracts? And any suggestion as to how do you see the markets for the next series? This series largely has been very, very volatile.
Yeah, agreed. Good morning, Sakshi. Good morning to the panelists and all the viewers. So let us first discuss about the indices. As long as 25,000 is defended on the lower end of the range, we don't need to worry. And if 25,000 is broken and if the indices has given a close below 25,000, then there is a bit of a dip to the tune of 24,800. We are of the view that indices will not break 24,800. So here we are in the critical zone. Probably from the current level, we'll get a good support and bounce back. Else, if we get a bit of a correction, then 24,800 is a final floor. So we are initiating a buy coverage right now as far as the Nifty is concerned with a stop of 24,800. So it's a 200-point stop, and on the upside we'll trail the stop loss and continue the rally till 26,000. So what we are looking right now is that 24,800 on the downside is a pretty strong floor. 26,000 on the upside is a psychological resistance. So this is the range in which indices will Nifty will play. Talking about Bank Nifty again, Bank Nifty is trading at a very interesting level of 55,000. Again, a breach below 55,000 will take us a bit lower to the tune of 54,500. On the upside, 56,000, 56,500 is what we are looking at. So as far as Bank Nifty is concerned, with a stop of 54,500, we are recommending to go long at the current level for the potential target of 56,000, 56,500. Now, over the weekend, last weekend, what we have spotted is three sectors, and we are of the view that these three sectors have a potential to move up significantly in next 3 to 6 months technically. First is the PSU bank. So what we have picked up is four banks, that is Bank of Baroda, Can Bank, SBI, and PNB. We are of the view that a fresh round of upmove is started, and going forward, these four banks likely to post around 10 to 15% gain in next 3 to 6 months. Second, we are pretty bullish as of now with respect to the insurance companies, in which we have picked up five insurance companies, that is HDFC Life, SBI Life, ICICI General Insurance, ICICI Pru, and LIC. So these are the five insurance companies with which we are playing right now. We are of the view that the entire sector is up for a significant upside, and sooner than later, State will talk about the sector. And the third sector which we are liking as of now is the realty sector. So from the reality sector, we have picked up three stocks. First is Godrej, second is DLF, and third is Prestige. So I think net we are of the view, Sakshi, to sum it up the entire conversation. We are on the verge of a turnaround from the current level after the consolidation. So with a stop of 24,800 and 54,500 respectively in Nifty and Bank Nifty, you can go long. And we are also recommending to go long in three sectors, that is PSU Bank, insurance company, and realty sector.
Okay, so those are all the sectors and the key stocks from within those sectors that Mitesh has penciled in as his bullish views there. So we'll keep an eye out on that. Let's look at how the markets are shaping up in terms of key stocks. Adani stocks are higher. We can see Adani Enterprises, Adani Power, Adani Energy Solutions all in focus. We have the defense stocks as we were discussing with Gaurangji earlier. All the shipbuilders are higher. Cochin is up by 1.7% at 1928. We have GRSE that's higher in trade again by about 1.5%. You have even data patterns that's higher in trade. So a lot of these defense names are actually pulling up substantially as well. We have Zuari Industries, there's a 0.6% equity that's exchange hands. That's moved up substantially too. So keep an eye out on that. Tata Motors is on the back foot on the back of those cyber attack impact. Newgen Software also, another order flow that has come in, has pulled the stock higher by about 5.5% in the early trade. So those are some big movers that we are finding. And of course, metal stocks like in copper, that's also moving up substantially as well. Coming back to Gaurangji, defense space you already pointed out is moving up substantially again, reacting to that big development from the cabinet from here on as well. What's the next target? It's again coming back to those levels that we started covering at Gaurangji before the split happened, also 2000 odd levels, and then it went down lower, coming back at those levels. For those who missed your views then a year and a half ago, what would you tell them now?
Sakshi, look, never repent in stock market. This is something that I've learned over the years of experience that I've had. It's not like you miss the bus and there is no opportunity in the future. And I've already spoken about the defense sector being a 3-year, 5-year plus kind of growth story.
Yeah.
And I strongly believe that even beyond these kind of time horizons that I'm speaking about, there is going to be plenty of opportunities that is going to come. I was reading a report some time back that the Defense Ministry and the Minister, the Raksha Mantri, Shriman Rajnath Singh Ji, has actually made some big changes in the defense procurement manual, Sakshi, which is going to open up another round of order flows coming in. This is only domestic. Bigger picture is going to be in terms of export market for defense, and that's also going to augur extremely well for it. So this time is also not bad. If you miss the bus, take the step forward, go out, take the leap. That's how we will learn to fly.
Fantastic. We will chunk this out for sure for all our viewers who are really keen on knowing when to enter defense, when to not. And, all of these confusions will get clarified as Gaurangji has completely told you as to how to go about it. If you miss the bus, no worries, don't repent and continue to focus on today and in the future as to how do you build that up. Fantastic there. Gaurangji, any thoughts on the Adani Group stocks after the clean chit? We haven't spoken to you since then. What is your thoughts there on that one?
Well, so before commenting on Adani, I think Heidenberg has shut his shop, if I'm not mistaken.
Yes.
In US. There is no trace of the people responsible for what they did couple of years back to the Adani Group. So my take on Adani Group, of course, we have coverage on Ambuja Cement, in which they did some kind of a creeping acquisition, if I'm not mistaken, some time back. But on pure Adani Group companies, there are strong companies, no denying about it. But since we don't have coverage, I won't give any specifics. But which are those strong companies? So you have the flagship company Adani Enterprise, which branched out into different companies, and wealth was created tremendously for investors. Then you have Adani Ports, you have Adani Green, you have Adani Total. A lot of companies are very strong, Sakshi, but these are no recommendations. And now that the authorities have given a clean chit, and of course the statement made by the chairman, Mr. Gautam Adani, I think we have to put everything to rest.
Okay, fair point. Mitesh ji, would you be buying and participating in this fresh move that we've been seeing from last couple of sessions right after the SEBI clean sheet in Adani stocks?
Sakshi, we have continuously discussed this business group in past, and we have recommended this in past as well. That what we are technically looking is a pretty strong up move. The up move has come just before a few days, but we have been bullish on this group since a long time. We are of
Yes.
the view that along with this group, I think the next group, which is technically on the radar, is a Tata Group. And out of that, if you look at the entire phenomenal run of Tata Investments, this is just
Hmm.
a start. So I think as far as Adani Group
Okay.
is concerned, the disclaimer is that our clients have a direct indirect position into that. I don't have any position.
Hmm.
And
Hmm.
second thing, we are absolutely bullish on this entire bunch of stocks from the Adani Group. This is just a start, Sakshi. Probably we'll have to wait and watch. And the only request to all the viewers is that when any marathon run starts into any business group, please use a boring trailing stop loss strategy so that you cannot miss out. Here, the point is not to exit at the top, but once the high beta stocks moves up, they have a phenomenal run and they have a very highly volatile run as well, both on the upside and the downside. So advisable to approach this group or any group per se, which is highly volatile with a trailing stop loss strategy.
Okay, we'll definitely keep an eye out on that as well. Gaurangji, before we have to let you go, help us understand with what is your thought on this fresh bout of IPO rush that we are seeing in the on D Street. I mean, 25 IPOs in a single week, including both main board and SMEs, a dozen of the main board IPOs. Difficult to even keep track of what is come and what is opened and what is shut shop. Today, there are two of them that are closing, including Anand Rathi Stock Broking. Urban Company, we had discussed quite a bit. It, in fact, you've also spoken about it on the channel. That was one of the IPOs that came in and doubled investors' money in just about few sessions, 4-5 sessions as well. Tell me, what beyond urban are you looking at now?
Sakshi, I think this only goes to show that there is no dearth of liquidity. The
Mm.
number of IPOs hitting the street and the total value of those IPOs. And remember one thing, that whatever comes into the market comes in with a lock-in, and there is a lock-in expiry also. I think the host of number companies which came in with IPO sometime back, this month end and possibly early next month, October's second, third week, you will have a lot of paper coming into the market in terms of expiry, lock-in getting expired. So my only humble request to all your viewers is that don't treat all papers with a single thumb rule. Don't treat everything with a view of listing gains. Businesses are different, managements are different, products are different, services is different, valuations are different. You need to be careful how you approach the IPO. And only after you understand it, go and take part in that IPO. Otherwise, stay back.
Okay, you've not tracked any of Geojit reports that have come out on the recent IPOs, have they?
Well, I think Vikran Engineering and
Yes.
something like that was on the horizon. Uh, Asheshasai Tech or something was also covered
Yes,
by my
yes.
team.
Today it's
But
closing. Yeah.
I'm more of a secondary market, not a primary market guy.
Anand Rathi Brokers, do you think it can repeat the success of Anand Rathi Wealth? I mean, 1000% rally in last 4 years is what we've seen for Anand Rathi Wealth, and investors have been in for a party. Those who stayed on for a long time. Do you think that replication could be done?
Well, I'll answer this in a different manner because I don't want to be caught, unaware,
Sure,
and we don't cover
sure.
Anand. So, if you are a believer of the Indian capital market, next 3 years, 5 years, 10 years,
Yeah,
then all those entities which are strong performers, fundamentally strong companies, will definitely. We like this sector, Sakshi. We have CAMS,
okay,
Computer Age Management Services, under coverage. But there are also other strong players. This is not a recommendation. So you have
sure.
BSA amongst the equity market. You have MCX amongst the commodity market, which has done
Yes.
stellarly well. Then you have NSDL, CDSL, and you have strong intermediaries. But these are not recommendations, just a view in terms of which are the other strong companies which are associated with the Indian capital markets.
Fantastic. Gaurang, always a pleasure to have you with us on Business Today. And thank you so much for keep coming on. And now you've started to make appearance on our India Today show as well. So good to see you there. And of course, we'll see you for the closing edition as well someday there. Thank you so much for being with us. Always a pleasure.
Thank you, Sakshi. All the best.
Thank
Love
you.
interacting. All the best.
Thank you, as always. Mitesh ji, coming back to you. First up, since we were discussing this entire theme of capital markets related stocks, how are you looking at it currently? Right now the markets are volatile. We do know in the last 1 year, the equities have not done too much. We're just about 4-5% higher in trade. In fact, in contrast, we've seen and we've discussed with you before also, commodities like gold and silver have outdone equities, by a huge margin. And this is for the second year in a row as well, when we've seen such a substantial move. I even remember speaking to a lot of people last Diwali and asking whether gold can continue to shine, and they were very apprehensive and saying that, we don't know if a same kind of a move can be seen. But this time it's even outdone last year's move as well. So, how are you looking at both the capital market opportunities at this stage, and how are you looking at the gold related opportunities? Muthoot has come to a record high level there on the back of gold financing. So, how are you looking at opportunities?
Yeah, so Sakshi, the math is simple and which is absolutely boring. So you put 33% in equity, 33% in debt, and 33% in gold and silver. And believe me, you can beat any higher allocation in equity. We have a matrix over here in which if 70% is allocated to equity against 30%, the difference of return is just 2%. Okay. So it's like 70% equity, 20% debt, 10% gold and silver against 33% equity, 33% debt, 33% gold and silver. The difference of return is hardly 2%. Sakshi, when you're talking about a marathon run in silver and gold, we have
Yeah.
discussed this at length in past, so we'll
Yes.
not discuss it again. But see, what viewers need to understand is that the down cycle takes 6 years average. Okay, so for an example, as of now, if the gold is making a top or in the process of top, I don't know, I'm just discussing it. So if, for an example, in next 6 months or 9 months, gold is topping out, then believe me, Sakshi, to get this rate, it will take 6 years. Okay, so gold is a cycle of 6 years. So be absolutely careful, and there has to be a split between two. First is an investment view, and second is the purpose with which you're buying the gold. So that is how it works. So we are of the view that at any given point of time, if you want to treat this asset class into your portfolio, SIP SIP is the best option because the waiting period is too long. So don't get excited with 1 or 2 year return, and don't allocate higher capital over there. It is going to be a big mistake. Coming back to the point of return, Sakshi, right now I think the high beta stocks are making a comeback. So in case of, like, if you look at the chart pattern of Suzlon, if you look at the chart pattern of Yes Bank, if you look at the chart pattern of GMR Airport, I mean, all these stocks are looking phenomenally great on the charts. And we are of the view that going forward, this small ticket charts which are there in the FNO space will likely to outperform. I mean, as you rightly pointed out, that I mean, it is difficult to recall this name of the IPO because it's too much of a rush,
Yeah.
right? Right.
Yeah.
So sometimes you are completely off the track saying that if the primary market is buzzing like anything, even you don't remember, even I mean, whatever capital you are sitting with, you fed up, applying for the IPO right now. That is the kind of number which is coming on the street, right? So the point is that market is not at an all-time high, but since the primary market is buzzing, so we are expecting, and which was our earlier expectation as well, that during the Deepavali time we may hit a fresh high. So, Sakshi, I think coming back to the investment theme, you should and must concentrate right now only on the agri commodity and the commodity cycle. That's what we have been discussing since last 6 or 9 months. And I think metal will come back very strongly, Sakshi. So all the eyes are on Hindalco, Nalco, JSW, SAIL, and Tata Steel.
Okay, got that. Let's also focus on some of the other pockets then in the markets and see what's moving on. Defense is one theme that we were also discussing with Gaurang. Miteshi, what is your view? Today, all the shipbuilders are up, even HALBL is pulling up as well again. But we haven't seen a sustained move on defense. It moves up for a few days, again there's profit booking, and again it starts to move up with fresh order inflows. So what's the best way to approach the defense stocks at this point?
I think defense will take a bit of a breather right now because the other
Hmm.
habitat stocks and the sectors are in focus. So I think 5 or 7% of an upside is there, but rightly Sakshi, you rightly pointed out that it is basically after a move, it's a consolidation, right? You won't get a sustainable upside. So that is what is going to happen as far as the entire defense and railway is also concerned. Because I think now selective PSU, there is a long and short, Sakshi. So if I look at the PSU theme, I think I'll not pick up right now defense with respect to technicals. I will pick up first the entire PSU banks, followed by the odd names in the PSU. Like if you look at the chart pattern of BAIL, pretty interesting. If you look at the chart pattern of NMDC, NTPC, if you look at the chart pattern of Coal India, REC PFC duo is coming back. So there is a, I mean, you need to be very selective as far as the PSU theme is concerned.
Okay, fantastic. I hope this has also truly helped our viewers out understand where exactly, to strategize when it comes to these movers in trade. Let's discuss about the declining trends. IT sector after Mitesh ji, over the weekend, the sector has been imposed with that $1 lakh H1B visa fee. We haven't seen the large companies like TCS, Infosys, HCL Tech, Wipro come out and talk about whether this will impact them. Some of the smaller ones did come out, like Emphasis, Persistent, Coforge. They did say that their dependence on H1B visas is already reduced quite a bit, so they do not expect such a massive impact or a disruption because of this. But we are yet to understand what's going to happen for the large companies, because larger the companies, the more revenues they draw from US and the more portion they have of outsourcing in the US as well. So how are you looking at that, sir?
So technically, I'll give you two points. First is technical, second is subjective. First technical
Yeah.
point is that the entire index has bottomed out. So Sakshi, in the SIP form, you can go ahead. I think we have discussed it earlier as well that you need too much of a capital to buy Infosys and TCS and Wipro and everything. So it
Hmm.
is advisable to go ahead with the ETF. So through in ETF view, ETF mode or through the mutual fund mode, you can participate into this sector. So that is the first thing. Now looking at the subjective view. The subjective view goes like this: that see, Sakshi, entrepreneur will never wait for something to turn. I mean, they need a signal and they prepare themselves. So they're looking at the drama which is happening between India and US. I think majority of our IT firm has now prepared for the worst case scenario, and I don't think so going forward any decision related to H1B or any damn thing will, I think, impact profitability margin by a big way. Because see, beyond a point, you cannot control this external factors. So you have to be better prepared. So I think the IT companies will better prepare of themselves. If we earn less, it's okay. But we do not want to get into that volatile mode or a mode in which we'll have to every day revise our strategy. Because this US India tension tomorrow, it might be another thing, right? So advisable, I mean, looking at the chart pattern, what we are sensing is that probably the entire sector and the stocks are making a base, and in the next 1.5 year, the sectorial rotation will happen in two sectors. First is IT, second is FMCG. So we are recommending to go long in both these sectors through the mutual fund mode to our clients.
Okay, got that. I hope this is truly given you some sense, viewers, as to how to go about it. One more space that I wanted to discuss with you is the pharma space that's being lost in, all the moves that we are seeing or the themes that are running at this point in time. One is the negative that we discussed on IT. On the positive side, we have the consumer oriented sectors. And between all of this, some of the real core economy sectors are getting missed out to really see. Pharma, healthcare, of course, because right now there is no sign of what kind of a Trump tariff impact will there be seen. That doesn't, that still remains in an uncertain pocket. And pharma healthcare also is a domestic theme, largely, and therefore we need to find out in what basket and how to approach the pharma stocks right now.
Yeah, so Sakshi, as far as pharma is concerned, if I'm looking at the Nifty Pharma in the month of October 2024, it hits an all-time high at 23,907, and since then it's a consolidation zone. Before 4 weeks, our system as method has indicated a buy, that is on the week ended 5th of September 2025, there was a buy at 21,924. So we are of the view that yes, the stock is up for a considerable upside going forward. But I think we'll have to wait and watch, Sakshi. I think what we have looking at is a level of 23,162. So once that has been taken over, definitely there is a strong possibilities of the sector rotation and the sector re-rating. But again, it will test your patience. Probably in the next 1 to 3 months, actually, we'll get a clear-cut idea in the breakout in the pharma sector. Till that, we'll have to sit on the sideline patiently, and we'll have to wait for the signal.
Okay, fair point. Let's also look at some of the other pockets then. Mitishi, anything else apart from the ones that we pointed out to you? Where are you finding some momentum that one could really look at?
Sakshi, your voice is not clear. Can you repeat the question, please?
Any momentum based sectors, stocks that you feel one should definitely keep on their radar right now?
No, not now. I think we'll again have to wait for a week or so because this week's breakout will give us a clear understanding, Sakshi. So I'll definitely wait. As of now, as I said, in the next 15 days or 20 days, if I have to take a call, it will be definitely metal followed by the PSU bank. So that is where the whole concentration is because we get a pretty strong breakout in these two sectors. Other than that, I don't think so. It is that kind of a lucrative opportunity looking at the risk reward and looking at the technical structure of the chart.
Okay, so the market's improving a tad bit from the low point. It's in the green, 25,073 on the Nifty right now. The Nifty bank is also into the green at this point in time. Between the Nifty and the Nifty bank, Miteshji, where are you spotting more opportunities?
Sakshi, definitely and undoubtedly Bank Nifty because till date in Bank Nifty PSU have not participated and I am of the view once the PSU start participating I think the frontline banks like HDFC, Kotak, Axis, ICICI and the most important IndusInd Bank will also come into the focus. So I think if I have to give an allocation I'll be going ahead with 70% allocation to Nifty Bank and 30% allocation to Nifty. So that is how it works. So I think in Bank Nifty there is a pretty strong possibilities of running up pretty sharply in the next few sessions as compared to Nifty.
Fair point. Okay, keeping an eye out on that as well. Now, within the banking space, also, Miteshji, are you looking at this fresh move which is coming in the PSU banks? You did highlight a few banks there vis-a-vis the private sector banks, and help us understand between the two over the next, say, short term. Where do you see more momentum coming in? So far in this year, it's been the private sector banks that have been leading the recovery in the Nifty bank. Is it going to turn the tide and is it going to be the PSU banks?
Yes, right now. Yeah, absolutely. Now the cycle is turning, Sakshi. I think PSU will take the front seat and the private will take the back seat. But again, it is going to go now hand to hand. If you look at the chart pattern of all the four big PSU banks, SBI, PNB, Bank of Baroda, and Can Bank, I mean, there is a big consolidation, very big consolidation. So when the breakout comes in, it is just like gold and silver. They will not stop until they post 30-40% gain, right? And in PSU, 30-40% gain, Sakshi, is just a matter of 1 quarter because they have not performed. In that kind of a phenomenal or strong up move, you cannot witness I mean, in a 3 month period, you cannot expect Kotak or HDFC Bank to move up by 20%. But yes, SBI can definitely move by 20-30%. So looking at the chart pattern, looking at the risk reward, we are of the view that yes, it's a time for PSU to drive the entire rally going forward.
Fair point. Okay, Miteshji. So the first half an hour of trade is nearly done. Of course, it's the expiry session, so we'll have to wait and find out how the day really pans out in trade. First half an hour has seen a lot of momentum in key stocks and sectors, which we've already discussed with you with both our guests today. Miteshji, any suggestion for the new series now before we let you go as to where to keep our focus? And key sector and stocks that you are bullish on. You did mention 3 sectors in the beginning of your commentary and you selected a few stocks there, but only for the next series. What are you going to be advising?
I think for the next series, one should look at the entire Tata bank. So Tata Technology, Tata Motor, Tata Elxsi. I think Tata Elxsi is not there in the FNO, but Tata Motor, Tata Steel, Tata Tech is what I am looking at. So Tata Pack will likely to outperform in this series. Point number one. Point number two, as far as principal indices are concerned, Sakshi, with a stop of 2,400, 24,800 on a closing basis and 54,500 on a closing basis, both are spot level of the respective indices, Nifty and Bank Nifty. You can go long. In this series, what we are expecting, in the next series, what we are expecting is a close above 26,000 as far as Nifty is concerned and around 56,500 as far as Nifty Bank is concerned. There is a 1,000 point to be made in Nifty and around 1,500 point to be made in Bank Nifty. There will be a phenomenal run towards the Powali session. That is what we are sensing right now. So advisable to get in because it is again available at 200 point stop loss in Nifty. You are getting 1,000 point an upside. So it's a 1:5 kind of a risk reward ratio. So advisable to go long in the principal headline index at this point of time, along with Tata Group.
Fair point, Mitesh. Thank you so much then for being with us. Always a pleasure to have you, and the clarity with which you shared with our viewers, the thoughts, they definitely get benefited. So thanks for coming week on week and helping all our viewers out. Always appreciate your time.
Thank you, Sakshi. Thanks for inviting me.
Thank you. Viewers, 25,038, and we are seeing volatility again being at the top. So we will see how the markets really pan out in trade. We'll track the entire market movement for you throughout the course of the day. So stay tuned with us on Business Today Television. In case you have stocks about the stock, questions about the stocks in your portfolio, you have some fresh stocks that are coming onto your watch list, and you're not sure as to what to do with all of those. Well, ask your questions on daily calls at 12 noon, and I will be with you with two market experts guiding you on your queries.
Europe is building a wall, not of bricks or steel, but that of drones. After Russian drones violated